In the late 90s, PayPal was the leader in online payments revolution that preceded Bitcoin by a decade. Now it's adjusting to the new reality of the crypto era when money is becoming truly programmable. So please welcome Fortune Media's Alan Murray, who will be joined by PayPal's Jose Fernandez de Ponta and Dan Schulman. Thank you.
Thank you. Gentlemen.
Alan.
Good to see you. Good to have you here. So Dan, I want to start with you because we did a poll of Fortune 500 CEOs recently that showed that almost 90% of them have no plans in the next 2 years, no plans to adopt cryptocurrencies as a means of payment or to have them on their balance sheet. So you're in a minority. What are you seeing that your Fortune 500 colleagues aren't?
Well, I think what they're saying is they're not ready to accept a currency that's volatile or invest in a currency as an asset on their balance sheet. I don't think what they're saying has anything to do with the vitality or the future of what's happening with digital currencies or cryptocurrencies. I think there's been a lot said about, the crypto winter. I think anyone who thinks that just because the price of Bitcoin drops below 30,000, they're not thinking about really what the future is. We are big believers that kind of the least interesting thing is what the price is tomorrow. Really what is most interesting is the underlying infrastructure in terms of what can you do with adding utility to payments. Having software programmable money, being able to use stable coins and kind of reimagine what the rails of the system might look like as a result of that. 80% of the central banks are looking at some form of CBDC. We're working with many of them to think about how we can do that. So as we look ahead to the future, I think we're in the early innings of crypto and digital currencies, but we clearly see it as being a major part and a redefinition of the financial system.
A redefinition of the financial system. And did you ever have any doubt about that? I mean, you did this a couple of years ago, really started down this path. Was there ever any question in your mind whether these technologies would redefine finance?
I think they always had the promise of redefinition. I think a number of years later, and look, there are a lot of naysayers. There are a lot of people who I don't think have spent as much time as many of us here in studying what the potential is. But I think you look at the current financial system today, and it's antiquated. It's a stubbornly high take rate, that actually the take rate is much higher for those who have less than it is for those who are affluent. It takes a lot of time for people to get their money. I think kind of rethinking the underlying rails of the system to move money quicker, to make it less expensive to take out intermediaries is the promise of a more inclusive financial system. And I think that's kind of the hope and the goal and the vision that all of us have.
I want to come back to that because I really want to understand how crypto makes the financial system more inclusive. But Jose, let me ask you first, you guys had some news this week on this front. You made the decision to allow crypto to be traded on and off the platform, which seems like, I mean, maybe I'm thinking about this wrong, but it seems like a pretty big strategic change for PayPal. You're sort of opening up the walled garden to allow this kind of movement.
That is absolutely right, Alan. And why are we doing that? Maybe offering some counter-argument to the other Fortune 500 CEOs. We recently ran a survey with Deloitte of 2,000 merchants, smaller and medium-sized merchants. 75 of them told us that they will enable stablecoin and cryptocurrency payments in the next 2 years.
75 of 200.
75% of all merchants.
75% of all of them, got it.
85% of them told us that they expect digital currencies to be pervasive in payments in 5 years. So this is coming, and we want to be a part of that. Our announcement earlier this week, what we have done, as you were saying, is enable consumers to get crypto in and out of their PayPal wallet. That does a few things. So if you think about networks, there is anyone's guess, but let's assume that crypto users out there is about 100 million of them in their network. The PayPal network that has hundreds of millions of consumers and millions of merchants was related but separated. What we did is we built a bridge between this fiat universe and this crypto universe. And you need to believe that the value of those two networks combined is going to be so much higher because it enables, right off the bat, it enables a bunch of different things. So consumers who have crypto with us, now they have a really easy way to experience the Web3 and the app environment. They can take crypto from their wallets, send it to their external wallets, MetaMask, anything else that they are using, a hardware wallet if they want to use it, and they can go explore Web3 from there. Also, I think that we have established the best experience for peer-to-peer of crypto. You can send crypto that you have with us to anyone else that is on the crypto system in the US. If there is a PayPal user, it settles in minutes, charge no fees. I don't think that has done before. And by allowing people to bring the crypto they hold outside and use that as a funding instrument in PayPal, basically we are enabling around maybe $1 trillion in crypto market cap that could not be used for commerce easily to come into the PayPal system and be used to pay anywhere that is accepted. And the third one is security. We know that many crypto users want to hold their keys on their hardware devices, on their hosted wallets. Many other users in the mainstream don't want to do that. And they value the security of keeping that with us. We are the only program that I know that offers free protection for consumers against unauthorized transfers. So if somebody suffers an unauthorized transfer out of their wallet, we will reimburse them.
But when I see you make a big strategic change centered around crypto like that, it tells me that you're not just seeing this as some small part of your platform. This is driving the show right now in a lot of ways.
It is a very integral part of the show. As Dan was saying, we think that a relevant part of commerce will move to digital currencies. Digital currencies writ large, so that includes crypto, includes CBDCs, includes stablecoins. It doesn't make sense that we are doing transactions in the same old rails that we have been using for 50 years. We are a commerce and a payments company. The reason that we are interested in digital currencies is because it is probably the first opportunity in the last 50 years to have fundamentally new payment rails.
And Dan, how do you think about the volatility? I mean, it's not small, right? If I woke up one day and saw my dollar holdings had dropped by 50%, I would be on the streets. So what is the volatility telling you, and how do you deal with it?
You would be on the streets?
You what?
You would be on the streets? I'd like to see that, Alan. I really would. I don't think the volatility is a good thing per se. I think most of us would prefer it to be less volatile because I think so much of currencies revolve around trust, and trust is an imbued quality that isn't a hard asset. It's just, do you trust this or not? And so I think if you think about what most people are doing right now is they're trading these assets, but it isn't being used as a utility in payment. As Jose mentioned, I think most of us who are thinking about the next several years ahead actually think this flips completely. And that the worlds between fiat and Web3 start to come together a lot more. We think we can be quite a bridge between those two worlds. We would much rather see, 10 million people doing a $10 type of transaction than, 10 people doing a $10 million transaction. We really believe, our platform that has almost 400 million consumer accounts, 35 million merchant accounts, that we can be a lot of this bridge between what was and what will be going forward. And so the volatility will lessen over time. The utility will increase. I think the way that regulators and governments think about this is going to evolve. You're clearly seeing that happening. One of the things about our announcement going on chain for the first time is that, the New York DFS was part of our press announcement. They are one of the most thorough and demanding regulators in the country. And I think doing responsible innovation with the blessing of regulators, I think is a very important thing. I don't think that, regulation and innovation go against each other. I think we need to learn to actually embrace each other. And I think you're finding a lot of people in the various agencies, people, government officials around the world trying to think about what does this next generation of a DLT technology look like going forward, and how might it help their citizens? And I think there's a big future in that.
That's really important. Look, there are a lot of people in this community clearly who think regulation is bad, period. I know you spend a lot of time in Washington. You've been talking to the regulators. How confident do you feel that we will get sensible regulation out of this process?
Well, it's like everything. It's going to take time. I think we'll have a number of senators who will either beam in or be here. They've got a lot of comprehensive legislation. The Biden administration is looking at, the ECB is looking at it, the PBOC. So these things always take time. They always take time. And you have to have patience with it. But we will come to some form of a regulatory understanding that looks to protect consumers, ensure stability in the financial system, and allows innovation to flourish going forward. It has to be that way. People, you may not want it to be that way, but that is the way it is going to evolve.
Jose, you guys have been doing this for a while. You have a lot of information. You're collecting a lot of data. What can you tell us from that data about how crypto is being used by PayPal users?
So, as Dan said before, still the preeminent case for crypto users in general is either they buy it to hold it and see whether it goes up or down on value, or they use it to explore the Web3 universe. They send it to DeFi protocols, they use it to buy NFTs. What we see in our platform is either buy it and keep it, or they use it for a checkout to buy for commerce. What we expect to see very much in the spirit of, by opening this connection to the open blockchains, to see way more opportunity of them exploring the Web3 universe in their own. What has been very interesting for us is going into this, we have a certain preconceived idea that the population that would adopt crypto would skew younger, or would skew more affluent. What we have seen, and obviously PayPal has a very large user base in the US, so we are a good proxy for what we have seen is that the population that is adopting crypto is not very different than the general population that we have,
really?
Which brings a lot of promise in terms of adoption. If you look at the numbers, not from us, but the latest surveys that I've seen there, is that about 16% of adults in the US have had some crypto experience. 16%.
16.
Yeah, that's about 30 million individuals who have been doing that. And many of them, a large part of our audience, we are their first crypto experience. So there is an appetite for mainstream users who are hearing about digital currencies to be able to have a friendly and simple experience getting there. And we are very happy to provide that first experience.
Yeah. Dan, I want to go back to this question about inclusivity, because I know this is something you feel very passionate about. I think you and I first met in a conversation about this. How does cryptocurrency help financial inclusion?
Well, if you think about the number of people who are outside the financial system today through the world, call it approximately 2 billion. If you think about the number of people who are probably underserved by the financial system, I think you can probably double it. These are folks who either don't trust the system, it would be inefficient for them to be in the system because if you have less than a certain amount, you have fees charged on top of it, and their cash flows are not as consistent, so they can run into problems quite easily. Any way that we can move money faster is going to be extraordinarily helpful for those who are, struggling to make ends meet as the month moves on. Any way that we can lower the costs of those transactions is going to be tremendously valuable for those who most need it. In the US alone, there's probably something like $140 billion spent by those who most need that money on unnecessary fees and high interest rates. And so if we can figure out a system that allows money to move faster, has less intermediaries in it, reduces the cost of that transaction for everybody, does not have people living in certain countries where you can have volatility in currencies, then that will be, by definition, a much more inclusive
And
economy.
is there any indication that that population is using it on your platform now, or is that a future state? Are the unbanked coming to PayPal and using crypto for significant financial transactions?
No,
Not yet.
not right now. Really, think about it. Really what we have today, for the most part, was buy, hold, sell. As Jose said, the overwhelming majority of the people who came on to our platform to buy, hold, or sell crypto were new users, which was great. We expanded greatly the population of users into the crypto space. Now, we're moving on to the chain. We just opened up, not that long ago, the ability to use crypto as any other funding source inside the PayPal wallet. We will instantaneously take your crypto, translate it into fiat, and you'll be able to use that at any one of our 35 million accounts, merchant accounts. So we're trying to add functionality, but what we just did with transfers is kind of like the opening step. You might think about us moving from a fiat-oriented world into a digital currency.
So you're really playing, playing a long game here. We're at the very beginning of this transformation in your mind.
We are playing a long game, but it wouldn't be surprising to me. It depends on how you define long, but I think you're going to start to see some significant changes over the next 5 years.
Yeah. Did you guys see the announcement that Jack Dorsey and JayZ are creating a crypto academy in New York for underserved populations? I don't know if you think that's a good idea or haven't.
More power to both of them.
So cast it forward for us. I mean, what is the world going to look like 5 years? The financial world going to look like 5 years down the road, or 10 years down the road, in your view?
I can get us started. I think that there are three things that are really exciting me when I think about the future, not the far distant future. So I think that we can see there. The first one is NFTs. I think that NFTs, when we look beyond the early use cases, and you think of an NFT as a digital property right, that is something that can enable a significant number of use cases that we can probably not even think about now. So
and that goes way beyond finance. I mean, that'll probably transform my business and a bunch of other businesses as well.
Absolutely. So thinking of them as digital art is one early use case, but thinking of them as, now I have a way to prove that I own something on chain, that is a very, very significant development that we'll still need to see in the future. The second one is stable methods of exchange, whether they are stable coins or CBDCs. The ecosystem needs that. For us to be able to serve merchants at scale, they need to be willing to settle in digital currency, and they will want stable coins. And probably the third one is identity. It's really important that there is a way to have digital identity on chain so that you can prove who you are. And for some of the use cases, it's going to be really, really important.
So those are the three big ones. Is the NFT a true
NFTs,
stable coin?
Correct.
And digital identity. And how far away are we from having those three?
I think we are very close to having NFTs at scale. Well, NFTs are already there.
Yeah.
They can be extended. I think that we are close to having stable coins that are suitable for payments at scale. Digital identity, there is some very interesting early work that the community is doing. That one is probably a little bit further out.
But I think, Alan, if you pull back a little bit from those specifics, like clearly the world is rapidly digitizing. People are looking to do more and more of what were previously disparate things in the economy, move it onto digital and have them integrated. So things like shopping, payments, basic consumer financial services, budgeting tool sets. I think all of those are coming together in integrated apps. You could call them a full digital wallet. Other people refer to it as super apps, but more and more is coming together. And so you have disparate parts of the economy coming together in a digital way. And then you have the underlying rails that support that also evolving at the same time. And when you live in kind of the center of where technology is evolving and you see it distributed all over the community now, the next 5 to 10 years are going to bring massive change. You'll move into a whole different form of processing. Everything will be moved out into the edge. The amount of devices connected to the internet will grow exponentially because you really don't have to worry about battery life anymore. The cost of smartphone should come down quite dramatically because all intelligence is moved out to the edge and you have almost instantaneous access to that, so you don't need to store it in your phone. It can really be almost like a smart piece of glass. And so things are going to change quite rapidly, and the financial system is going to go through more change in the next 5 to 10 years than it's gone through in the last 30 to 50.
And does a recession slow that down at all? Does crypto winter slow that down? Or do you think it has its own pace and dynamic?
Well, I think there is the reality of the necessity for companies to show a viable business model, to be funded, to be able to move to being, having free cash flow. I think trust is going to be an important element going forward, and I think those things can be inhibitors with a recession. But I think for companies like PayPal, this is a time for us to double down as opposed to pull back.
Is that the way you're looking at it, PayPal? Double down?
It is, yep.
Yeah.
Indeed, if you look at the history of crypto, this is not the first time that we are going there.
We've had winters before.
We have had winters.
And we've had springs every time.
Every time.
It's like the sun comes up every night.
And if you look how they move, usually the market goes up really fast, then it comes down, and it stabilizes at a higher level than it was the last time around, and continues to do that. Something that is probably different this time is, for the first time, we have 30 million crypto holders in the US. So the moment that you start to break into that mainstream, we don't know yet what it's going to do to how short or long that winter period is going to be.
Yeah.
I think it's a perspective of time, Alan. If you invested $1,000 10 years ago, you'd be a multi-millionaire. Now, Bitcoin goes from 70,000 to 30,000, and people are calling it a digital currency winter. one of my favorite quotes is, comparison is the theft of joy. So like, and usually what happens are
The
people—
theft of?
Joy. So like, you know, people always compare everything. Wow, it used to be here, now it's here, now it's like, it's all a perspective of time. And if you really believe and understand the power of the underlying kind of infrastructure, as well as the different way of thinking about the way that the system can evolve, you're not thinking about things like in a 1 month, 2 month, 5 month, 1 year time frame.
Yep.
You're thinking about it in a much elongated time frame.
So Dan, I have to ask you, I listened to you talk about digitization as reducing transaction costs in finance and increasing inclusion. But the history of financial innovation in recent decades, I live in Greenwich, Connecticut. I'm surrounded by monuments to the increasing of the toll that is taken on financial transactions, right? Hedge fund mansions everywhere. The history of finance has been to become a larger and larger share of the economy, not a smaller and smaller share. When do we get to the point that we really see that payoff of potentially less expensive financial transactions?
Honestly, I think the moonshot of the financial services industry needs to be to democratize financial services, that managing and moving money has to be a right for individuals, not a privilege for the affluent. And I mean, I don't want to wax too philosophical here, but financial health is the bedrock of our democracy and of our economy. If too many people struggle to make ends meet, if they feel like their future for their kids is not going to be better than what they had, then they start to doubt the system. And when the system is doubted, then people tend to radicalize around that and rail against the system. I don't think that's healthy whatsoever. And so I think, you know, and I've talked about this, you know, in the halls of Wall Street and, you know, on the stage of many different places, that we ought to be thinking about how do we use technology to imbue a modicum of financial health to everybody, because that is good for all of us.
Do you get any pushback on that from my neighbors in Greenwich, you know, from the people who are occupying those hedge funds?
I don't really know your neighbors all that well, so I don't know what they would say.
Yeah.
But I do fundamentally believe that corporations have a responsibility to think about more than just like what is the maximum amount we can deliver to a shareholder in the short term. This is about how do we maximize returns over the medium and the long term. And to do that, I think you need a rising tide to go and do that.
Well put. Last quick question before I let you both go. Personally, do either of you own cryptocurrencies, and what do you do with them?
Of course we do. Yes.
We do. I definitely do.
Yes, as investments, as transactions,
What do I do
as
with
experimentation?
What do I do with crypto? I buy it and hold it and sell it with PayPal. I transfer it out of the wallet. I send it to my unhosted wallets outside. I buy NFTs, and I explore the apps as much as I can.
Bravo. Dan?
I buy, hold, and sell, sometimes outside of PayPal before it happened, but now only inside PayPal. And I don't really sell much. I kind of hold. You know, and we're doing transfers now because we all hold external wallets and internal. So it's an opportunity to really start to explore kind of what is more difficult to set up into Web3 now than we think it needs to be going forward. And I think we're going to help accelerate.
Do you want to eat your own cooking and learn how to make it better?
Yeah, we always do.
Great. Gentlemen, thank you. Great conversation.
Thank you,
so much.
everybody.